Struggling real estate investors, new real estate investors. Are you looking for better ways to close more deals? You're in the right place. Each week, I pick a random property off the internet, analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation investor and realtor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. Before we dive in, if you haven't done so already, please hit that like button and share this with somebody who might also get some value out of it. This week we are sticking in Nebraska, but we are headed west towards White Platte, Nebraska, 602 Tomahawk Road. It is a 3 bedroom, 2 bath, 16 and a half, or 1,648 square foot. And they are asking $280,000. It has been on the market for 221 days. And there's only 17 favorites on it. So not keeping up there. Let's see if they're telling us anything in here. Nope, nothing there. All right, let's see what we can find from these pictures. Got a big 3-car garage, always a nice feature. There's your lot layout. So it's a corner lot. Decent backyard. I like the retaining wall. Look at the house. I do not like this big tree hanging over the house like that. I'd leave the tree, but I would probably take these big limbs out. Dated kitchen. Staining on the flooring. Tile countertops. Wow, those gotta go. Very, I don't like the look of this. Crack right there. Wallpaper. Is there another crack over there? And there's another crack on this window here. Oof, that's back in time. Tile countertops. Why didn't anybody think that was a good idea? Like two. Hmm. They finished one of them off? I don't know. All right, that's all we can pick up on the pictures there. Let's see what else we can find out. Um, so that, wow, the average list price range is 69,000 to 885,000. That's a big that's a big range. Only 82 homes for sale. Average home value 254. Average age 41. A little over 18% college grads in the area. Average household income is just shy of 70,000. Almost 40% of the market is renters. And you can use their calculator to break everything down. I like using a different one, which we will get to. Value increase. So all of the experts, 277, 300, 283, 286, or an average of 286, and they're currently listed at 280. There's where you're at on the chart there. Property taxes are really low. Like this area better already. So obviously they've been on the market for quite some time. Started at 300 and now they're down to 280. Let's see what some of our sold look like. This one's pretty comparable. This might be. What else? All right, let's check this one first. This has a big detached garage. Same bed and bath and right around the same square foot. And that only sold for 250. Let's see what the inside looks like. Not showing me anything on the inside. All right, can't compare that one. Well, let's jump back. Let's look at this one. So certainly older home, a little bit bigger, about 500 or 600 square feet. Updated, nothing super, but definitely updated. A one-car garage in the back. What else? Let's try this one. Um, one more bedroom, about 400 square feet more. This one's definitely been more updated for sure. Hmm. All right, so what I'm doing trying to go through these and figure it out is I'm looking for what I think our ARV or after repair value would be. That's what ARV stands for. What it's worth once everything is completely cleaned up, everything's updated, and we are new. I think we found as much information on here as we can. Now I'm going to jump over to the Invest Nest and break this thing down for a cash deal. So I've got it pulled up here on the Invest Nest. I love this site. There'll be a link in the show notes down below. We'll get you 1 week for free and 50% off of your first month. Try it out. Let me know if you like it. If you do, come back to this video and drop me a comment and say, hey, it's great or it's not so great. I love to hear people's opinion. We got some basic info on the house here. And if you are into skip tracing, they include that in the monthly price. They don't charge extra for it. Click that button, you'll get all the seller's information and you can contact them directly. Doesn't look like there's a mortgage on this. If there is, they're not telling us anything about it. They're estimating the value at 277. All right. And let's calculate. All right, we're just going to call this the property address. All right, our purchase price. So based off of what we found off of homes.com plus what the InvestNest is saying, I think we're going to say our ARV or after repair value is $270,000. So to figure out our purchase price, I'm going to take 70% of that minus the repairs. So 270 times 70% gives me 189. And now what do I think it's going to cost to renovate that thing and get everything up to date? Shooting off the hip, and I don't know this market, so certainly check with the local. I think we're going to base on a renovation on that place about $30,000. So that gives us an offer price of $159. Closing cost, we're going to offer to pay both sides, buyer and seller. Lender, our DSCR lender or traditional lender, DSCR, debt service coverage ratio lender. They base it off of the production of the property, not your financials. And our lender's going to charge us 2 points because that's how they get paid. We set our improvement cost. We think our renovation is going to cost us $30,000, and I want to try to lump that into the loan. I'm going to put down 25%. I want a 30-year term, and rates are sitting right around 7%. So we'll make that a nice even 7. All right, rental income. There's two sites I like to check with this. The first one is Rentometer or Rentometer. Phenomenal site. They're saying the average in the area is 1630, median 1675, low side just under 14, and 18 and a half on the upper end. Once we get this thing cleaned up, I think we'll at least be in the medium. So for that, I'm going to use this 1675. Just to double check though, I always like to check HUD or Section 8. And again, all the links for everything I'm using today will be down in the show notes. For a 3-bedroom, they're saying they're only going to pay 1261. I like this number better. So we may not get a Section 8 tenant here, and that's okay. We don't focus our entire business on that. When we get them, we like it. So we're going to put in 1675 for our rent price. And our taxes match up with what Holmes was saying. For insurance, I like to factor in $125 a month or $1,500 a year. Our property manager is going to cost us 10%. Our tenant's going to pay all of our utilities, and there is no HOA. Reserve fund, I call it my war chest. That's 5% for vacancies, repairs, maintenance, and capex. Capex is your maintenance items, your deferred maintenance, or things, big ticket things like your roof, your HVAC, the expensive stuff. We'll plan on a 2% in appreciation rate for the property, and I like to increase my rents about 2.5% per year. Plan on holding for 10 years, and we are real estate investors. We don't pay full commission. All right, let's see what these numbers look like. You were waiting to see if it cash flowed. I know. I had to ask at least one more time. If you haven't done so already, please hit that like button and share this with somebody who might find some value in it also. Now, let's see if it cash flowed. Cash flow positive. So we are looking at a net cash flow of $123 a month with $56,000 out of pocket. That's a large chunk of change. But remember, 30 of that is going into the renovations. Well, 30% of that plus our down payment. Cap rate is more of a multifamily thing, but I like to see it somewhere between a 6 to an 8, so it kind of works right there. DSCR is a little bit low. They like to see at least a 1.2, but you can possibly make this work. Cash on cash returns pretty low at about 2.5%, and your ROI over the entire period with rent raises is about 11%. 1% rule, if you do follow that, it does work. Another thing I love about the Invest Nest is they break all your numbers down so you can see where everything falls. Well, our total income, 1675, total expenses down here. So we're putting right about 250 a month into that war chest every month. And to hit 10 years, which is roughly what we plan on keeping it for, we're looking at a 9% cash on cash return. Another chart that I like that the InvestNest breaks out is your equity position. So you're looking at about 8 to 9 years before you draw all of that money out. That was all your down payment. So to get all of that back and then start, what I call it is an infinite return. Is at that point, once I have my own cash out of it and I'm just using the bank's money or OPM, other people's money, now I have an infinite return. Every dollar that comes in off of that, I'm using somebody else's money to do it. I like that a lot. Now we're going to jump over and do my favorite part, the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. It'll also be in the show notes. We said our ARV or after repair value is 270. And our purchase price on a creative deal, we're going to get a whole lot closer to that price. So on this, I think we would generally offer probably about 250 with maybe a 4% interest rate. I want to try to get a little more creative here, and let's just see if we can do 270 with 0% interest. And what we're doing there is we're building the interest into the loan. So every payment we make is just chipping away at that 270. Now to figure out our PITI or principal, interest, taxes, and insurance, I'm going to use bank rate. All right, home purchase price 270. They automatically go to 20%. I only want to offer 5% down. Our interest rate is going to be 0. Zip code doesn't matter. Homeowners insurance, we said 125. Property tax is 65 a month. Let's see what that looked like. $903. And we don't have any interest, but principal, interest, taxes, and insurance is that 903. Let's plug that back in over here, 903. And we used a rent price of $1,675. Now we're talking. Gross cash flow, 772. War chest, 251.25. Management, 10%. Net cash flow, a little over $350 a month. That's a solid deal right there. Now we got to come in, insert all of these other numbers to see what our ROI would be, or rate of return, or return on investment, excuse me. So our cash to the seller was that 5% down, which was 13.5. And agent commission, they're not really getting it done. Let's see if we can throw 500 bucks for them to go away. Assignment fees, we're not getting this deal from a wholesaler, so we don't have to factor that in. Closing cost is going to be that same 4% that we used on the cash deal. Renovations, 30 grand. 2 months of holding is just 2 months of this PITI or your mortgage payment. No arrears, and a good TC or transaction coordinator will cost you about 1,500 bucks. So for $28,000, you can have all of that money back in about 6.5 years. Now, my calculator does not include rent raises, so we're probably knocking this down closer to about 4 years. And for me, that's my target. If I can get all my capital back out within 3 to 4 years, that's a good buy, because then for the rest of that loan, I'm just banking cash using other people's money. What are your thoughts on 602 Tomahawk in Platte, Nebraska? Cash deal? Creative deal? Which one would you pick? That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.